The use of the internet is for sure is going to be a continuing trend.
For that very same reason, you started with your 401k, you started with IRA, you started just with a savings account. Those are the right place to start.
The first question that a lot of investment advisors, the first thing they'll talk to you about is, do you have your portfolio properly allocated among all the different asset classes? Biggest thing that you need to think about is liquidity. If you need the cash, you can sell immediately.
One other thing I just wanted to put out there, something that we talk about a lot, is this idea of the democratization of capital, which is something that our securities law support us on.
A lot of our clients are using the internet to market their deals and their investment opportunities.
Then later, as you build up a certain amount in those accounts, you start seeking these alternative investments with what we're talking about.
If you invest in an entity that's taxed as a partnership, then you may be allocated income that you have to pay real taxes.
Welcome to the Executive Connect podcast, and welcome Roland and Sarah.
Oh, thanks, Melissa.
Thanks so much, Melissa. It's great to be here.
Now, I want to start with just maybe some insights and what inspired you two to team up, and how do you see alternative investing evolving in 2025?
I can start. I have been practicing here in Texas for a real long time, and Sarah joined our firm and was wanting to expand her practice area. So we started working together and just found that we have a lot of overlapping complementary experiences. And so we started this, decided to start this podcast together to talk about really the practice area that we make our living from, and it's creating alternative investment opportunities for investors. We wind up working with finance a lot for commercial real estate, but we have a couple hedge fund clients as well, and we've done private equity deals as well. So that's kind of from my perspective. And Sarah, you can answer too.
Well, I think Roland summarized it well. We're law partners, and so we started working together, and that was going really well. And then Roland had this idea for alt investing made easy for some time. And Melissa, as you know, podcasting is a serious commitment, and you need a team. And so he asked me to be on the team, and we've worked together on it since then. And it's been really enjoyable and an opportunity to learn a lot of new things from each other and from the people that we interview. And at the same time, what we're working on is providing legal services for our clients, but also providing an outlet for them to assist in their capital raising. So, and also our clients who are accredited investors and more investing on the passive side, giving them a chance to have access to deals that we happen to know from our own clients are pretty good ones. And so I think all of that's come together and been really good to work on, and is something that's also been fun. So I really appreciate that. I've learned a lot about podcasting. I know we were talking about that before, that it's a new skill that we all need for the future.
Yeah, isn't that the truth? If I would have told you 12 years ago I'd be working casino gaming and doing podcasting, living in Austin, I would probably be laughing, because it's something that it's such a different way of doing things and learning how all the tips and tricks. So I'm so excited to talk about this subject with you. And I'm curious, maybe we'll start with you, Roland, to hear how you think alternative investments are changing in 2025 versus how they've been done in the past.
I think that the use of the internet is something that for sure is going to be a continuing trend, and we work really with some relatively small scale deals. And so a lot of our clients are using the internet to market their deals and the investment opportunities. I'm sure for the larger deals, there are still networks of broker dealers, investment banks, family offices, just different groups, continue to fund things in the way that they've always been done, just through, informal or formal networks that are built up throughout the financial services industry. But, I think for more and more, the internet is a thing, and one of our clients sort of questions, what's really the value to me of advertising my private securities deal through the internet, and they're skeptical that somebody's going to click on a link and invest in their deal. But the answer is just more and more people are becoming more and more accustomed to doing everything through the internet. And so that's what, if I were going to, I would just say that it'll be a continued tool. And it's really why we, decided to create Alt Investing Made Easy, because it's just a way for us to market our attorney services, but really to, if Sarah uses a term, I'm going to steal it, Sarah, but we're attorneys plus plus. We're not only your perfect legal secretaries, but we're helping our private securities clients sell their deals, which not all attorneys are doing, and they actually can't unless they're separately registered as an investment advisor.
Ready to lead smarter and invest wiser? On the Executive Connect podcast, we unpack executive strategies for wealth and influence. Hit the subscribe button now. Don't just watch, act.
Right, which, by the way, Roland is registered, and I'm working on it. So I totally agree, Roland. And, one other thing I just wanted to put out there, something that we talk about a lot, Melissa, is this idea of the democratization of capital, which is something that our securities laws support us on. But that what we're also talking about here, because Roland made reference to these formal and informal networks that exist in the existing financial services market, those, if you're an outsider, or if you're on the smaller scale, or if you're at the beginning of your wealth building journey, accessing those networks is either not possible because you don't have the connections, or it's very expensive. So something that we can do, and one reason it should be, appealing to clients who are on the lower, let's say on the lower scale of wealth building, and we're talking about high, an investment banker does deals in the hundreds of millions of dollars. So it's, everything is relative when it comes to describing wealth. But our services, or services like those that are available through online platforms, are affordable for people who have certain resources to invest into their marketing and et cetera, but don't have unlimited purse, that like big corporations and big wealthy investors have. So very high net worth investors have. So this is a great way. I think we can actually serve a segment of the investing community that needs access to marketing their deals, but wouldn't be going necessarily to big investment banks.
Yeah, I love that. I want to simplify this a little bit for our listeners. I know when I first started my journey as an investor, I thought it was just a 401k and an IRA and my savings account. And as I've grown through my journey of investing, there's a lot more to it, and there's a lot more ways to create real actual wealth than your 401k and IRA.
Mm-hmm.
So let's start with just an essential that every investor should know. And with your experience in law and finance, can you maybe share a little bit and maybe simplify it down to our listeners before we get started?
Well, Sarah, my mind went to asset allocation.
Mm-hmm.
The first question that I think a lot of investment advisors, or the first thing they'll talk to you about is, do you have your your portfolio properly allocated among all the different asset classes? And the biggest thing that you need to think about is liquidity, and making sure that you're invested in things that if you need the cash, you can sell immediately. That's investments in public equities and things like mutual funds and public stocks and all the names of the big corporations that everybody knows. But there's going to be a smaller portion of your portfolio that you can allocate towards more illiquid assets. And these are alternative assets. These private securities deals, you're still investing in shares of stock, LLC interests, but these are unregistered companies versus a registered companies that have registered stock offerings, that are traded on the public equities markets. So just understanding that what we're talking about with alternative assets are private securities deals that have much more severe liquidity restrictions than the public equities that most people think about investing in.
Are you a high-income professional looking for smarter ways to protect your wealth? The Texas Freedom Fund gives you the opportunity to invest in energy assets leveraging proven fracking technology and prime access to global markets. With strategic oil and gas investments, you can build real wealth while benefiting from tax advantages under laws dating back to the Reagan era. Take control of your financial future. Visit texasfreedomfund.executiveconnectpodcast.com.
Right. But for that very same reason, just like you said, Melissa, you started with your 401k, you started with IRA, you started just with a savings account. Those are the right place to start, right? That's something that you can digest and understand, especially, if you're early on in your career, you're going to be supported by your employer probably in making, allocations to those accounts, regardless of whether you can spend the money or not. So, and I think then later, as you build up a certain amount in those accounts, you start seeking these alternative investments with what we're talking about. And I think just to give a concrete example, commercial real estate is a great example of an alternative investment, like whether it's, investing in, I guess, technically fix and flips, which are maybe not exactly commercial real estate, but multifamily apartments, those kinds of things. Those are great places to start because they're very safe, because they have solid underlying real estate assets. Then you move on to other kinds of assets, which have other risk profiles, but at the same time, they can be very solid based on their importance. And I think oil and gas is one of those. And as we've discussed in other contexts, Melissa, you're very familiar with oil and gas investments, and those are also a kind of alternative investment, and they're really important because, of course, being the commodity of oil, we all know that that's fundamental to human life as we all know it today. So I think in the end, these are the different areas that it makes sense after you reach a certain point in your investing career where you have a certain amount of money, or you're young enough that if something goes amiss, you can recover easily and quickly before you're too old, probably. This is alternative investments is a place where you have to do more due diligence. You have to do more thinking and understanding of the investment. You don't have the registration that Roland referenced and the oversight of regulators that you might have for public equities, but you do have a lot of opportunities to make solid returns, and in a way that's not even necessarily very risky, provided that you make sure you apply yourself to understanding the investment and doing your due diligence.
Yeah, I love that. I think, as we grow, like you were saying, in our wealth, it's important to look at these alternative investments, have advisors like you two to help us down that journey. I think that's been really key for me. And I know one of the reasons I've personally looked at alternative investments was because of the tax advantages.
Mm-hmm.
So initially it wasn't about the money, it was more about the tax advantages. So Roland, I want to get from your work with private investment partnerships, what is one critical tax or compliance component that new investors should consider when they're looking at these alternative investments?
Yeah, it's a key disclosure that's in every PPM that we draft, and it's this, that if you invest in an entity that's taxed as a partnership, then you may be allocated income that you have to pay real taxes on, but you may not receive cash from the company to correspond with that income that's just allocated. Every year you're going to get a K-1 that reports the performance, the economic performance of the entity that you're invested in. And again, we're assuming that the entity's taxed as a partnership. You're going to get a K-1 that allocates income to you, and that's, that should reflect something positive, that the entity is profitable, but they may not actually send you a check in that year for cash, and so you're going to have to come out of pocket to pay the tax liability associated with the investment. I think that can be a little bit of a surprise to people, but once you start investing in this area, you'll know that can be a thing, and it's not ideal. And there, a lot of partnerships will manage that by making tax distributions. But if you were going to ask me one thing to really pay attention to with respect to the tax treatment, that would be the thing that I would bring up.
Yeah, that's great. I know, Sarah, I was thinking when he was saying that, one of the things that I in this space, it's acronym overload and slang overload for me. I know working in casino gaming and technology and cybersecurity, we have a slew of acronyms, but in this space, I know there is been a lot of different words. So I want to touch a little bit. You have corporate finance experience across many different continents, and so you really know the lingo. And I want to talk a little bit about what an evergreen strategy is for structuring deals with that really withstands different market shifts and the changes. So can you talk a little bit about what an evergreen strategy is?
In terms of an evergreen strategy, I actually know that in several different contexts. So from an investment advisory perspective, I don't really have an answer for you.
I think a lot of times when I'm hearing these acronyms, they're different strategies versus an accredited investor, how like being an accredited investor, for example, like what does that mean and how would one qualify to become an accredited investor to deploy some of these strategies? Maybe we can talk a little bit about like what an accredited investor is, how do people know if they're an accredited investor, and how can they leverage some of these strategies and asset allocation across their portfolios.
Oh, okay. So for accredited investor, it's a fairly straightforward definition that you get if you're a business investor, if you're investing through a corporate entity, there are different requirements. But if you're an individual, you need to have $1 million of net worth independent of your primary residence. And you also, or you can qualify as an accredited investor if you have $200,000 in personal income or $300,000 together with your spouse in personal income per year. And demonstrated by documentation in some contexts. And also you need to have a reasonable expectation that income would continue from year to year. So, and then there are other ways that you can fall into the category of what's permitted to accredited investors, depending on sort of your education or your status and your certain accreditations that you might have. So accredited investors are basically defined in the regulations. It's basically what a wealthy person is. It's how they're defined for the purposes of participating in alternative assets such as funds, open-ended or evergreen funds, if we want to call them evergreen funds, or any other kind of fund. You're not restricted in terms of the kind of alternative asset that you can invest in. You are restricted on the basis of your qualifying for this accredited investor test.
Did you want to say something, Roland?
Well, no, I was just you're going to add that the accredited investor test, it's relevant, and a lot of people have heard the term Regulation D, Reg D offerings, and that's all we do is private securities deals relying on Regulation D, and Regulation D is where you have all these accredited investor rules, and so these investments are primarily aimed at wealthier individuals, and there are a couple reasons for that. One is the ability to sustain loss, to go out and hire attorneys to enforce your rights under a contract, and also not only the ability to sustain loss, but you don't need the liquidity again, and that liquidity is something that is really key. So it seems unfair, I think, to some people that these are restricted to accredited investors and which tend to be wealthier investors, but a lot of that just has to do with courts presuming that a wealthier person is sort of swim at your own risk. They don't need the lifeguards that less wealthy investors need, and the lifeguard in the sense of having a registered offering where there's a lot of publicly available information about the thing that you're investing in.
So essentially, just to visit that, Melissa, if it makes sense, we have these securities laws. People have heard of the Securities Act of 1933. There are others. And if you haven't, it's also fine. Reg D is part of that. And the whole reason that we have securities laws in the first place is because of the experiences in our over the past centuries of people really losing a lot of money in the stock markets and otherwise in investments that have been so unregulated that they could be there was a lot of vulnerability even for wealthy and sophisticated people. By the way, a lot of wealthy people lost money in the 1920s. It wasn't just people who didn't know much. So that's kind of the history of our laws, and the basic idea is that there do need to be some guardrails to provide it to all and all of the investing public. Otherwise, we're just too vulnerable as a whole to be defrauded. And what is that? There's certain disclosure requirements. There's certain information that has to be required regarding certain kinds of investments. And then, of course, in reality, we can't regulate every single private offering. That's unrealistic, and it's expensive to become a publicly traded company. So the exceptions that we're talking about, and the purpose even for having something like an accredited investor versus a non-accredited investor, is if you take it from the most restrictive stance, which is that every single offering to any investor in the country has to be registered, which is not realistic and not is going to have a chilling effect on the economy, for example. Then you start to stratify and narrow down and eliminate sort of requirements that make it too difficult to raise money until you get to this accredited investor test. And the purpose of that is to, again, provide some guardrails because there's less publicly mandated disclosure the way you have for publicly traded companies, but then have sort of a cutoff, not because if there's any judgment on anybody for having more or less money, but just because if you do have a certain amount of money, then you can also afford to hire attorneys and accountants to help you assess an investment. You can, and again, there are exceptions for people that are in the business, let's say. So there's an acknowledgement that if you have the knowledge necessary and you have the certifications to prove it, then you can be treated as an accredited investor. So it's really obvious in the legislation about all of this that the whole purpose is to make sure that investors are knowledgeable enough, either on the basis of their own experience and education and certifications, or on the basis of information being available. And that's why we have an accredited investor standard at all. Now, arguably, there's a lot of, especially since crypto has come into the play in these past 15 years, there's a lot of argument about how, we don't need that. And people should be able to make their own choices. And, there's nothing wrong with that kind of an attitude. But if you look back to history as to why we even have any regulations at all about offerings of securities, it's because we used to do things that way and it went terribly wrong. And a lot of people were really, really harmed by it. And not just poor people or not just a certain class of people. Everybody was really, really harmed by an unregulated securities market, and or let's call it a distributed or non-regulated or unregulatable market, which is arguably, what cryptocurrency is it's maybe not possible to regulate it in any kind of comprehensive way. So the idea here, and this is, I think, an important point for people to understand, especially if you have a view that there shouldn't be very much regulation in our lives. The whole point of all of this is the hard experiences that our people had before us that led up to needing some regulation in this area. How we argue the boundaries of those regulations is another matter. But in the end, probably the US economy has been really served, and investors and wealthy people and people who've built wealth from zero to a large amount in this country on the basis of the American economy have been served by these laws over time. So this is, I think, the main reason that when you see the accredited investor standard, if you feel constrained by it as a promoter of an investment or as an investor, maybe it would help you to understand that, you might be fine, but as a whole, if everybody's not fine, then you have a problem in the investing economy as a whole.
Yeah, I love it. I want to shift gears a little bit. I know crowdfunding is like something that's in my scroll. It's really popular. It's making waves online. With Roland, with your focus on real advisors, and Sarah, with your telecom experience, what's your take on these shifts online and all the dialogue that's going on right now?
Well, I think again, it's just the predominance or prevalence of the internet. We go to the internet for everything nowadays, and that includes investments. And on my online brokerage account, we're not talking about the things that you can buy typically through your online brokerage account, but there are exemptions. There are these crowdfunding exemptions that allow for the use of general solicitation and advertising in connection with the sale of private securities. And so all the advertising nowadays is on the internet. So it's really using the internet to sell securities. And if you believe that the internet will continue to be a thing in the future, which I believe personally, people will more and more invest in private securities deals through the internet.
Yeah, I think that makes a lot of sense. And also, I think what people in telecom say today is that every telecoms company now is actually a technology company. And arguably, maybe you could say telecommunications companies were the original technology companies, because they, of course, started with the telegraph, was the breaking technology of that day, and came up forward to where we are today. So I think it's inevitable that investing goes online, as it should. There's so many reasons that are good for it, and that don't, uh, just to make an equate it to, that we all are used to signing with DocuSign now, right? So digital signature, right? But still, there are people out there who feel like that wet ink signature is better than a digital signature, even though arguably, as you would know, I'm sure, Melissa, the technology behind protecting that digital signature is so much more sophisticated than ink and paper, and how easy it is to forge such a thing. So it's kind of similar to me now, in this same way, is that for an investor, whether it's through a crowdfunding platform where you've got access to really cool little deals that would be impossible to find otherwise without an online, ability to research online, or the platforms that consolidate all of those potential things you can invest in, I think it's the same kind of idea that, we can have more security actually through using the internet. We can trace things better. If the underlying technology is blockchain, for example, then it's even more traceable, right? Who's owning securities, how it's being transferred from one party to another. Probably in on the positive spin is really just a positive development in terms of making things, safer for investors.
Yeah, I think it's interesting. I totally agree with what you were saying, Roland, about the internet. I know a lot of these alternative investments or crowdfunding that I've heard about, it's always been word of mouth. It's not something that I've seen online or things I can click on, but I know, YouTube and social media and different channels, there's all this buzz about crowdfunding and alternative investments. Click here to learn more, fill out our intake form. So I want to get maybe just kind of in closing in this segment, I want to get maybe your thoughts and insights about, moving from word of mouth on these alternative investments to seeing more of this online. Maybe any insights on what to look for qualified, legit crowdfunding or alternative investments.
Sarah, I have an answer for that, but
Go for it.
Well, I just think that this is a perfect example of the media that will be most effective in connection with selling anything, because you're having a discussion between three people that are presumably knowledgeable about the topic that they're talking about, and you get a chance to evaluate. We made an intentional decision to use video in connection with our podcast rather than just audio only, so that people could look at our faces and they could determine, hey, can I trust Roland and Sarah? That was an intentional decision on our part. And I think, particularly with the increased use of AI, I mean, everybody knows about that. Authenticity is going to be the thing that really sells in the future, no matter what it is that you're trying to sell, but particularly a private securities deal, an investment deal. I want to know that I can trust that person. And how can I do that? But, I get a chance to, I know it's hard to build trust through just watching a video, but you get a chance to observe the person that you're thinking about and seeing how they're responding, how they're projecting, how they're talking. Am I articulate? Is he articulate? Does he seem like an honest person? And so just the use of this media, I think, could be really effective in communicating. The videographer that we use for our podcast, he has a term, it's trust production. That's what we're in the business of, is producing trust. And hopefully the viewers of this podcast, of our podcast, look at us and they say, he's kind of got a, whatever. I make fun of myself, all the little things that I'm personally, self-conscious about. people can look at me and think, oh, he's got a blemish or whatever. But despite his physical disfigurements, I think that I can trust Roland, and it just being having a platform like this and getting up in front of people and saying, hey, here I am, this is what I do. Here, please introduce or please meet my client. They've got a private securities deal for you to consider. I just think it's a really powerful tool to get out in front of people and again project that authenticity and like our friend Mark says, trust production.
I have
Yeah,
another
and
point just to add to that. Sorry, Melissa.
No, you definitely.
Well, I was just going to say, we have a client on the law firm side that Roland works with really closely. And one thing I admire about them is they put a lot of effort into marketing and educating through digital media. And they have a weekly meeting of one kind or another that's focused on investor education. And then they also have a lot of other programs that they do. And there are a bunch of people, later in their careers or in their second career after retiring, and yet I think they're very effective with the trust building because it's time intensive. And because of that time intensive nature of it and the educational aspect, which shows what you do and don't know really quickly, right? Then it develops that trust because, if somebody's just going to do all of that for fraudulent purposes or for various misdeeds, it's quite a lot to put into something. As you know, from being a producer of a podcast yourself, that's quite a lot to get into. So something about that barrier of the video and then the consistency, there's a lot behind it. And that can kind of lead to sort of upping your trust factor, I think.
Yeah, I love that you just mentioned that. I think that's an important piece, Sarah, is for people that are not comfortable and don't know about alternative investments. I'm curious from the both of you, is there an exercise that, people should try to undertake before investing in alternative investments? Is there any exercises they should start with if they've never invested in an alternative investment? Maybe take us down that journey for someone wondering, should I invest this way or can I invest this way? Maybe just both of your perspectives on that.
Roland?
Well, I think, just general education is the most important, and understanding that when you're talking about alternative assets, you're talking about generally investments in private securities. So get used to reading the disclosure really carefully and know that you're going to be investing in a smaller company that's run by fewer number of people than some large public company. So getting to know the management team, evaluating them on a qualitative basis, which means, other than just the performance metrics, but who they are as people, their integrity is really important. So education, I would say, but also become a student of human nature and being able to evaluate people, in terms of, is this somebody that I can really trust? And we have an episode dedicated to one of our friends talked about his investment career and evaluating investment managers, and he used the term long story. And so the long story is say, okay, put aside your pitch deck, put aside your performance numbers. I want to know who you are as an investment manager, as a person. And just by listening to people and the way that they talk about themselves and description of their personal history, they can reveal a lot, and maybe sometimes reveal things unwittingly that they wouldn't otherwise reveal to you if you hadn't have taken the time to kind of put them on the spot and get them to talk about themselves personally. So anyway, that's a long answer, but
it's the long story. No, not really. The long story is like 2 hours. But I would just add to that I think one thing that we try to encourage people, because we're on this journey of education, right, Melissa? And I try to really focus on, lawyers read a lot of dense legal text. And for us, I don't know if it ever becomes easy, honestly, even after 20 years. It's still labor intensive work. However, one thing I think is really important to emphasize is that you as an investor, once you start down the path of choosing to be educated about whatever it is you want to be educated, whether it's commercial real estate, whether it's oil and gas, And then you get into the legal structures and the disclosures and all this stuff. You can actually do that. Like you can develop the ability to understand that documentation, to understand that industry. There are a lot of resources out there, and it's a matter of just having confidence that it's hard at the beginning to get your head around all the details, and then just being persistent is where you come into being self-educated. And with self-education in any way, it doesn't mean you can do the legal work or do the investment advising. But I personally believe that, the more responsible you are for your own understanding of everything, and taking different news sources, taking different sources of it, we hear all the time, oh, well, my other lawyer told me this. Great. I'm glad your other lawyer told you that. I'm not sure if I agree, but that means that you're seeking a multitude of information sources to kind of try to form your own education about something. That's positive. So I think alternative investments, fundamentally, like Roland said, it's about understanding the people more because you're closer to them. But it's still about understanding the industry and the structure of the investment. And again, because you're closer to it. And you can ultimately do that, even if you were, a teacher or an engineer or whatever your job was, and it could be you were in a profession or just worked in an environment where none of those things reading wasn't part of it at all, right? But you can understand these things. It takes work, that's all.
Yeah, I love that. And I want to again pivot because I know we're coming up on the time here, but we're all really interested in philanthropy. I know, we work hard in our careers. We have a passion for investing, but outside of us is, people that have jobs and invest. We're all interested in philanthropy. So as we kind of wrap up and looking ahead, Roland, with the Merciful Gardener Foundation, and Sarah, with your global perspective, I'm curious, how does philanthropy and innovation intersect, and maybe just both of your perspectives and on philanthropy in the world today?
Want me to go first, Roland?
Yeah, go ahead.
Okay. Well, look, I've lived around the world, and what I can say that's common to all of us, regardless of superficial differences of appearance and religion and nationality and patriotism and whatever system you're from, all of those things, underneath it, most people are trying to take care of their families, build a future where they feel secure at whatever that means for them, and basically kind of have a happy life, right? This is the same regardless of all these superficial differences. And so what to me is at the core of a lot of that, and the place that I'm interested in working, there are a lot of factors that go into what makes you happy in life, and what capital you have in your life. But when it comes to wealth building and just financial education in the first place, personally, I'm very passionate about um, financial education as early as possible. Kids need to understand what money is. Kids need to be responsible for I've known adults from other countries who don't know what credit cards are. Like, they didn't know that they had to pay it back. I've encountered kids back here in the United States like this. These kinds of things, I think we have to teach kids as early as possible what the financial side of life, because it gives you an ability to have a lot more happiness, because you're not struggling later, not because money makes you happy, but because you have a stability and a security. And wealth building is part of that. Alternative investments are part of that. And so, I would love to ultimately be able to teach a class to university students about alternative investing for your own personal wealth building journey. Just so because you can get started in a very small scale very early. And this is something that, again, I think is relevant to everyone in the world. It has nothing to do with nationality or any other thing.
I love that. I love that about you, Sarah. I think the greatest gift we can leave to our younger generations is knowledge and how to do things younger. I know some of the stuff I'm learning now in my 40s, I wish I had known, like you were saying, at 18. And
Exactly, me too.
I think even, sitting down with my own children and giving them a bank account and having them, understand what happens when it goes negative, and learning what happens when it's positive and how their money is making money. So ultimately, we have kids that are making their money work for them, and not always just working for the money. And I think that's something that is a great gift we all can do for our children. And so thank you for sharing that. And
100%.
Roland, I want to talk a little bit about impact investing to support causes like housing for the poor through your foundation's work.
Yeah, this is an idea that I think everybody needs to think about, and it's a part of your, we talked about portfolio composition, asset allocation, and I think everybody that engages with an investment advisor should have a conversation with them about charitable giving. And we have a regime in the United States where you can set up a nonprofit corporation and qualify it as a 501c3, a charitable organization, and you can be involved in the management of that entity yourself. And so this is something I would really encourage all of our clients to think about is form your own 501c3. Everybody's got I think at some level, charitable intentions, and you can embody that charitable intention in your own entity. And, we wind up working with entrepreneurs a lot. So apply those entrepreneurial skills to a 501c3. It's not for profit. You're not making money for the shareholders, but you can still apply these good business skills that you've learned to make it successful and achieve its charitable purpose. Merciful Gardener Foundation just amended its charter to change its purpose. And our purpose now is to alleviate poverty through the expansion of worldwide consciousness. And consciousness is a really important thing for us to think about. Just we hear a lot nowadays, people talking about being mindful and metacognition and thinking about how I think about things. And that's skills that I think, when we talk about financial literacy for kids, helping train them in the metacognition, being able to think about how they think about things, to be able to evaluate, what is mindfulness for kids, and really encourages them to be able to take a step back and look at their world as it maybe see it more as it really is, rather than just through the lens of whatever media or maybe the inaccurate pictures that they get from their parents even. So that's just a personal vision of mine. And I guess the other plug that I would make for it is, just as we've been developing as professionals, Sarah and I think, have really developed this unified kind of idea about how we want to implement our practice, both through the law firm, through the investment advisor firm. And it's really just thinking about financial capital as being only one type of capital, and there are other types of capital as well. And this isn't an original idea to us, but just going on, it's the J. Hughes Foundation, and they talk about 5 capitals, and financial capital is one of them, but there's also human, social, spiritual, and intellectual. And that's the really inspiring thing for me to think about, is that knowing that we can develop wealth starting today, investing in yourself and intellectually, engaging in spiritual practices, and your social, developing a community. There needs to be a balance there. And so I think that's something that I'm really inspired about personally, is that we can take these ideas out. And I think Sarah said it before, no matter who you are, where you come from, what your stage in life, you can think about creating wealth. And we don't even really have to talk about money necessarily. That's for sure a component of it, but there are other types of wealth that need to be built alongside of that. And, particularly when you're talking, about educating kids, but I need to educate myself now. I'm still learning.
I love that attitude. Always learning, always evolving. I know I spend a lot of time thinking about personally, like the legacy I want to leave. What do I want to leave behind? How do I want to help people? And that's what I love the most about you too, is you're already thinking about this, not just for your children, but for other people and their children. And so I want to ask, just looking back in both your careers and then looking forward with your legacies, what is the one thing and maybe the one piece of wisdom you hope to leave with investors, and maybe a key business takeaway as well.
Roland, me, you?
Go ahead, sir.
I think the main thing is, and they say this all the time in commercial real estate, just start. Don't worry about having to have a plan. Don't worry about what you do and don't know. You'll get to all of that. And I think they say this about meditation too, right? Or whatever practice you have to help you stay balanced in your life. You just have to start. And then whatever happens after that is part of your journey. Whether you fall off or get over this or that. Even in the commercial real estate, there's a lot of talk about how you win some, you lose some, you have these experiences. But you have to start, and having that be an intentional moment is really important. And on the business side, I would say, when you're a lifetime learner, as you talked about earlier, then it's exciting to learn about all these different ways of doing business. This is the approach I have. Like, I find it so interesting how people go about wealth building, running businesses, making money, not making money, whatever it is that they do, assets, all the different kinds of assets that are out there. It's very, very interesting. So again, there's no reason that you need to have a certain qualification before you start learning about things.
Roland, any thoughts from you?
Yeah, I think the idea of just starting is really crucial. And when you were saying that, Sarah, I think the reason why I don't start things, I think, is sometimes because I'm afraid. And really just not being afraid, and don't be afraid to fail. We don't hope that we don't make these huge financial mistakes where we lose lots of money, but there is an element of just starting and going out and risking, and understanding that failure sometimes, you learn more from that than you do from the successes, as we all know. And I think just starting and believe that you really can educate yourself about all these matters, and a lot of it is, it can be just common sense. So just becoming a better human being, like Sarah mentioned, the meditation. But anyway, I mean I think Sarah said it really well.
Sorry, I didn't mean to steal your thunder, Roland.
No, not
We've
at
talked
all.
about
I
it
mean,
so much, it's fair to say, was that originally your idea or my idea? I don't know.
No, for sure. I mean, that, there's something to be said for that. Having a spiritual practice, having a sense of groundedness of your orientation outside of, there's a classic business book, Good to Great, and the really great companies are the ones that had some purpose outside of just making money. I remember, I think it was Pfizer with vaccines, and that's kind of a heated topic nowadays, but, just I think it applies to everybody, that if you derive meaning from something outside of money, I think that'll really help drive your success.
Yeah, that's really great insight. And I love that you guys share, and not only the professional side, but your beliefs. I think that's what makes good partners. And I know something I was taught young by a mentor of mine is to surround myself with the best and brightest people I know. And I know that about the two of you. You both support each other. You're very sharp attorneys. You're very passionate about helping people, not just professionally, but personally and spiritually. And we're all lucky to know you and have us as in community. And so in closing, I want to get any final thoughts from you guys, or anything that we may have missed that you feel compelled to share. I'll start with you, Sarah.
I feel like we had a great conversation, honestly, Melissa. I mean, it's been wonderful. Thank you.
Roland, anything we missed that you feel that we want to share?
No, I mean, I think it's just, I really appreciate the opportunity to share some of the underlying values, and I it wasn't on my radar necessarily, but it really is something that, that's, everybody can have more success. I think the idea of having meaning in our lives, apart from money, really will help you be more successful, with the financial decisions. And so, that this idea, I'm glad we had a chance to bring it up, the 5 capitals, and financial wealth is just one type of capital. That I think that's the most important concept I would want to leave, everybody with.
Yeah, and I think, one thing that was coming to mind is we're a real I've noticed we're becoming a transactional country. We're becoming transactional people, and we're showing up in work in our lives. I need this from you. Give me this, without um, providing necessarily value or relationship first. So I love that you both kind of mentioned different things, because how you show up is not transactional. You show up, let me get to know you. Let's, get to understand each other. And then let's see if there's synergy between us. And I think that is a really important nugget to share, is having community and relationship with people first and understanding if it makes sense to partner. I know we talked a little bit about that at the beginning, but thank you both for being here and sharing your knowledge and your hearts with our listeners. And that's the Executive Connect podcast.